Glorious morning, Pythians. It is very good to be back in 2026 with the first Beyond the Price. Very sorry for having stopped this weekly stream series, but we're a small, tiny team, and I do not have 10 Claude bots running for me yet. But this is a great one to start the year with, where Sudu, thanks for coming on, Head of Strategy at BitMEX. Very excited to have you on. How are you doing today?
I'm good, and thank you for having us.
It's a pleasure and quite, a very fun one, I'd say, as BitMEX was the first official Pyth Pro user announced. So it's going to feel full circle, and very excited to talk about BitMEX to all the Pythians out there, and on a topic that I think is quite hot at the moment and throughout the past year of RWA, equities, commodities trading, and everything coming to 24/7 trading pretty much. So it's going to be a great one. And, Pythians in the chat, if you have questions for Sudu about BitMEX or anything, please drop them there. I'll select the good ones or the fun ones, who knows, to ask Sudu. But yeah, to kickstart, would love to hear just, a bit about yourself, your background, and what you do at BitMEX.
Sure. So I come from TradFi. I grew up and studied in London. I joined the city as a derivatives trader straight out of university, trading equity options and then fixed income options later. So about 20 years in the city, running desks for Merrill Lynch, for other large hedge funds and prop shops in and around, always around equity and fixed income. And then around 8 years ago, went down the rabbit hole of crypto. Used to see the price of Bitcoin, just this instrument being displayed in the newspaper. I just the more I learned about it, the more I realized what an amazing change this was for financial markets. And almost 9 years later, here we are at BitMEX.
Yeah, amazing. And before we get into all this equity perps, always on markets, I think it's pretty interesting to zoom out for a second, because BitMEX, has been around for a long time. You've been there for almost 9 years now and gone through multiple market cycles. And BitMEX is also we call it the OG of perp swap, perp trading. And given, what I guess the past year has been quite hectic on that front, I'd love to get some context about, how BitMEX got started into all this, and how you think of the role BitMEX plays today.
Sure. First things first, I've been at BitMEX only for 7 months now, but in the crypto industry almost 9 months. But like almost everyone I know in crypto, my first derivatives account was on BitMEX. So I've been a user and a customer for a very long time. Why have perpetuals taken a storm in crypto, and why do we think it's an instrument that's going to take over the rest of the world? We have to kind of go back, Pierre, to the world that existed before perpetuals. So before perpetuals came along in crypto, just like in TradFi currently, what you saw was essentially a spot market and futures market. And futures markets are the future price on current spot, and they could be 3 months, 6 months, 12 months out. And there was a fundamental couple of problems with this for a retail customer, looking at our crypto hat on here. One was that because of the cost of carry, which is very simple interest rate, present value of money, if you look at something like a 1-year future, it'll trade a few $100s over the spot price, even with that basis. And that's just because if you wanted to buy Bitcoin today, you'd have to pay $89,000. You could put it in a bank and buy the future instead. And so the guy selling you the future wouldn't give you that benefit for free by offering you the future at 89K as well. And that's what it is. But this caused a problem, because retail customers who looked at the perpetual were like, wait, why is, in current example, why is spot trading at 89K and why is December trading at 100,000? And they're like, well, you guys are scammers. I don't get it. Why isn't this 89K? And this was the problem that has existed in TradFi for 50 years, and why in TradFi futures trading is almost all professional trading rather than retail. And BitMEX, when it first started, I think almost 12 years ago, just like OKX at the time, had dated futures. And so there were a number of problems. There was the kind of liquidity issues, understanding, educational issues, and a bunch of complex things that didn't make these futures that liquid or trade in the huge size that it did today. And then you had kind of the founders of BitMEX who all came from a TradFi background like me, from Citibank and Deutsche Bank and places like that in Hong Kong, who sort of sat there along with kind of their friends and advisors thinking like, how do we solve for this? And the idea of perpetuals came up. And why do perpetuals work given the context I gave you? Well, it trades like spot. It looks like spot. It has leverage unlike spot. And all of a sudden, retail took to perps like duck to water in crypto markets, and that was the birth of it initially. So the concept is good. Now the second problem was, how do we make sure the perp trades like spot? And that was really an iteration as well. I think the original version of the perp by BitMEX referenced the Bitcoin dollar funding rate from borrow lend rate from Bitfinex, which is a very sensible way to try it, because what is the actual cost of dollars, and then apply that rate to the perpetual. If I had to borrow for margin, what would I have to pay? Well, let's look at the Bitfinex borrow rate. Now the problem with that was that it wasn't high enough at a couple of percent to keep the perp near spot. And the minute there was a bull market, the perpetual started trading well above spot. And then that created the same old problem of, why is this one price versus spot? And so the BitMEX founders kind of innovated from there to create a synthetic spot index, and then to compare the perp versus spot and create a funding charge where if perps trade above spot, the funding charge keeps increasing until it pushes it back down to nearer spot. And that is the same version which was created 8 or 9 years ago, that sits here today across all exchanges, and this is and created this successful financial instrument that we know as a perp or a perp swap.
No, yeah, I mean, it's super interesting to. I mean, I've just learned a ton just listening to these couple of things, and it appears from the past couple of years, and 2025 as perp is one of the top, I'd say, product market fit in terms of financial product and on-chain finance. And 2025 has been quite interesting, where I think you guys at BitMEX wrote a great blog that you posted recently about the year, saying the funding rate trade is kind of over, or at least came to an end in 2025. And lots happening with the October crash. And one question, for BitMEX is, with all of those, it was a tough year, 2025 for many exchanges. What decisions, or how did BitMEX, kind of navigate this past year?
Yeah, definitely a tough market. Probably still is. Every time Bitcoin rallies, you kind of get a little bit of hope, and then it just gets sold down again, and you're like, oof, So, but I think what the market taught us, and also our competitors, because we're not the only ones looking at RWAs, and in fact, if you look at DeFi, they've really taken to RWAs as well, was that we knew that our users did trade anything that moved. They liked volatile instruments, and if you just stuck to crypto, maybe it will mostly be volatile and interesting enough, but maybe not. And so then we started looking around, let's create other assets to trade. Now, it wasn't just derivatives, there's also spot markets. You got Coinbase and Robinhood becoming the everything app. So you go to one place and trade spot across everything. Well, it's the same logical extension was for us. And we were like, look, you come onto BitMEX with your assets, we want to give you as many different asset classes to trade. And so we started with equities. We launched gold yesterday, gold, on Tether Gold. We're looking at other commodities, and we're looking at other asset classes as well. And of course, there's this massive asset class out there, which is boring as hell, called fixed income, which, if we can create something interesting within the fixed income space that's volatile enough or interesting enough or for crypto traders, then they would come and trade that too. But so far, that's all work in progress.
No, yeah, and I guess that's a great segue into we have now a ton of interest, or even more. It feels like to trading RWAs and equities, and the massive swings on a bunch, and with the political climate and worldwide events that taking place, where everything swings quite sharp. And I mean, it feels like it was always hard, as you know, the stock exchange is technically closed from 9:30 I mean, from 4:30 to 9:30 every night. And it feels like on-chain and exchanges now have become the place to, overnight, or acting as the overnight markets for equities. And you talked about gold, silver, and all of these. And so, in your opinion, I mean, why did perps on these assets now gain so much traction after being very mostly crypto native?
I mean, although you're seeing the headlines around Nasdaq 24/5 and now New York Stock Exchange saying 24/7, they have been tracking the crypto space for a number of years. So it's not something that they just woke up on. There's just the speed that they tend to move on. And don't get me wrong, a dinosaur like the New York Stock Exchange going to 24/7 is a big deal for them, because this is a slow and steady, tortoise type of institution. I think what they've seen with perps is that essentially, and crypto exchanges, is that retail, the next generation of trader, wants to trade 24/7, and they want to trade when it's convenient. If you go back to my generation of traders when I was in the city, if you had a trader around the world who covered US or wanted to trade the US, they would have to work US hours. I mean, it means you're up through your night, and it's completely antisocial. That doesn't work anymore. If you want to capture a wider audience, you have to cater for when it's convenient to them. And so that was I think the origins around the penny dropping for a lot of these folks, that unless they innovate and adapt, that we're going to eat their lunch. And I still think we're going to have a good chance of eating their lunch, because just because of the speed at which we innovate and move as an industry. But they do have the volume. We've got the innovation. Now we need to meet in the middle with them.
Yeah, and I think, and that's a bit on the Pith side, and what we've been working on is the price discovery. Hopefully, happens in a bunch of places where me as a retail can go on BitMEX, Hyperliquid, and other bunch of exchanges that now offer 24/7 equities trading, and perps. Because one thing that I feel like overnight trading has existed for a few years now, but very concentrated to a few ATSs. So the Blue Ocean, I think it's Bruce, and OTC markets are the top three in terms of overnight trading. And for a bunch of these, venues like BitMEX and so on, to launch perp markets, you need some price providers. And so Pith has worked with BitMEX and along also other price providers. How critical is that piece of infrastructure on the price side for you guys to really make the exchange work, and all these perps, RWAs, and equities go well?
Well, the short answer is extremely important, and let me give you an example as to something that illustrates it. We along with any other exchange, we have launched and can launch products without an underlying price feed, because we could market straight to our own order book. We can take the mid of best, number of different ways. We can take the mid of best in offer, or a bid in offer, or bid offer last, and create an index, right? We don't need a Pith. But the problem there is, then who would trust that to trade in any decent size? Because what it meant is that a single participant in the exchange could move the order book in a quiet order and get everybody liquidated, right? Or ADL'd. And so that clearly creates a headline product, but doesn't create scale. And how do you create scale? is through a trusted independent third-party data providers like yourself. And then that's where it becomes critical. So first of all, why are you trusted? Well, you're trusted as PIT because you've got a number of blue chip TradFi and crypto businesses that feed prices to you. We, as the consumer of that data, take that price downstream and create an index. So whilst our perp someone may try to manipulate our perp away from index to try to liquidate a position, they're going to find it very, very hard if there's multiple data sources, meaning that they have to go to a few of those venues or institutions, OTC, lift it, move the price, essentially becomes a very, very expensive vector of attack compared to the first example where we could just spin it up using our own order book as the index.
No, very clear. And that's something that is tough to, or it's a tough concept to and to educate people about. But that's where hopefully PIF can bring some good products and help out the top exchanges with this. On more I guess back to equities, RWA, and where do you see this going? The next 2-3 years. And maybe some predictions on what's gonna happen with all of this activity and global demand.
I mean, we are, and I am personally a firm believer in the perpification of everything. I think perps are one of the greatest financial innovations in the last 10 years, basically. And I think there's no reason why everything cannot trade as a perp. In my view, because I think we've proven out the retail understanding and demand for it. Now we just need to get TradFi to understand it. So that's the first point. I think the education for TradFi is only beginning now. I've met several large banks and brokers over the last 6 months to talk about RWA perps, and they still don't really know what a perp means. And yet, if you go to any young retail trader, I think they already know what a perp is. So I think that's a very, very important point. And I think the second point is that, a lot of these, with the things that we do, by way of example, we have multi-asset margining, which means that you can basically trade your equity perps using Bitcoin, or you can use your stable coins to trade both, or you can do portfolio margining of one against the other. So I think these are the innovations. So we're going to go to a multi-asset, multi-margin world where you could deposit any eligible collateral and trade any product you want. And soon enough, I think our plans in the next few weeks or next month is to introduce gold as a collateral to trade equities or crypto, and then also we'll also bring in spot equities as well, so you can use that. So you can use your Google to short ETH, or use your ETH to buy Amazon, for example.
And so maybe it's a stupid question of me not knowing this, but how do you bring spot equities on BitMEX? Is it through some tokenized provider, issuer, or I'm curious.
Yeah, it's a very tough question. It might sound easy on the surface, but so if you look at the lay of the land right now, the only option is tokenized securities and specifically tokenized securities from offshore vehicles. So you got Ondo-backed, Denari, for example, securitized, I think, and others. Okay, how else can I look at spot equities? Oh, well, the DTCC, the Depository Corporation, announced that they're tokenizing equity is held in their clearinghouse or in their data ledger. And then you look into the details, you go, oh, that's great, because that's source of truth equity. But no, you can only access that if you're a broker dealer or a clearing member of the DTCC. So we can't do that. Okay, so then let's look at Ondo and Backed and all of these guys. Well, the problem for us as an exchange is, do we list 5 different or 4 different Tesla contracts? Then a year from now, do we list 50 different Tesla contracts? And the answer is no, because the consumer wants to trade Tesla, buy spot or sell spot, and B, they want good liquidity. So we cannot fragment liquidity across 50 order books and cause complete confusion. So what we're thinking about right now, and speaking to 1 or 2 market makers, is kind of creating a almost a basket of stocks, so that it's one Tesla, USDC, USDT, USD, whatever it is, but underlying it, there are a basket of different stocks that we may deliver against it, for example. And I'm sure that's not the only way to do it. There's probably way better ways and smarter people than I could think of. But we're starting down that process, because without that, we're going to struggle to bring equities into the collateral bucket, and we want to bring equities into the collateral bucket. I mean, obviously, some exchanges gone out there, like Kraken, have just bought X stocks, so they're all in on one provider. And even though what I say, if we can solve for a basket, it's great, because it simplifies matters, but it also doesn't solve for the fact that behind each of these tokenized issuers, there's an SPV somewhere in the world, a Cayman or BVI. And the problem with that is that now brings credit risk. So do you see an institution buying $1 billion, or a few $1 billion of a particular issuer? Probably not, because they're going to then have their risk department and compliance department will not sign off against a 2-man SPV in Grand Cayman, for example. So, that we haven't solved it. I think the start is come, tokenized stocks and perps, but the end game isn't here yet. And so this is kind of where, the other night I was asked by somebody, like, what do you recommend people to build and solve for? It's exactly this. I say build for creating RWA markets legally, risk engines, leverage, liquidations, collateral, build around that space, so that we can create RWA markets for wherever you are in the world, whether it's on-chain or off-chain. And I think that's the opportunity set here. I come from crypto, and I've always worried that we try to jump a couple of steps ahead of where we can be. And right now we're in the doorstep of these TradFi giants, and we should take them, take their lunch.
No, it's super interesting, because as much as lots of the exciting talks that you see on people going on is tokenization. We're going to trade everything everywhere, but a lot we forgot to read the docs here and there. Again, as we used to forget when we're using some very complex DeFi app that we didn't know where the yield came from. Now we're not sure about the tokenized stocks that we may be using. So that's an interesting challenge where, lots of fast innovation that is going to get really slowly adopted by more the TradFi players, and hopefully we can safely hold the spot Tesla and all of the good stuff that we want in our portfolio directly, either on chain or on an exchange. To that, what are some of the next things on the BitMEX roadmap for 2026? Any particular area of interest, or maybe aside from just launching a bunch of now equities and hot RWAs that people want?
No, it's bringing outside of that is bringing all of those together. And I think the key to solve for here is multi-asset margining. We've got very, very good multi-asset margining in our view, in the sense that we don't haircut the collateral too far, because you can add any collateral you want, but then if you say, okay, we will haircut the value by 50%, means that the liquidation is even nearer, and you're going to lose your asset the minute there's a price change in the underlying. So it's how do we bring high quality collateral with the least haircut as possible to make it fair to our customers and everyone's customers. And so that's what we're kind of starting to think about, other than adding oils and other funky stuff like that. We're starting with Tether Gold. Is what we're thinking about. Not launched yet. The perps launched, but not the spot and not the margining. But that's something we'll do in the next couple of weeks, and then beyond that, keep trying to bring in more and more, so that you as Pierre, a BitMEX customer, doesn't have to sell your spot asset in whatever it is to trade anything else you want. And I think that's the USP that we can bring as an industry. NYSE can go to 24/7, and that's great for our liquidity, great for everyone's liquidity, but they're still going to only accept dollars and maybe stable coins at some point. But I don't see, it's going to be very, very difficult as a retail, to as a customer of theirs to put Bitcoin down and trade, Google or something. And so we've got a good start on the TradFi industry from a margining point of view.
No, so yeah, very cool. Excited for what's next for BitMEX, and we're super thrilled to be supporting you with some accurate price feeds. One last question from me that my usual co-host ask. I'm gonna have to turn it a bit differently because usually we had more crypto. In the trenches crypto people on there, but it's, if you had one advice for yourself, starting your career, I guess, getting into the crypto world, Web3, and at BitMEX, what would you give yourself to get into the space and get a job and find your way?
I think the answer is just go experiment. The reason why I loved crypto was that when I was trading equity options at Merrill's for years, running the desk, one of the big desks there, and then I went on my own as a sole trader. I wanted to trade the same option markets, and I wasn't allowed to because the clearing member, the futures clearing member, FCM at the time, said, "Oh, we need you to have a minimum of €5 million of capital in your account. We need you to guarantee us €500,000 a year in commission." And I was like, wait. For 20 years, I've given you guys like hundreds of millions, probably in fees, or tens of millions in fees, shall we say, hundreds and millions, maybe billions in volumes. And now, yet by myself, I can't trade. Whereas in crypto, you can put $100 in, create an algo, or create a bot, and go trade. And I think what I'll say to a younger me is to get involved more in trying tons of different things. I kind of came into the exchange space just because of my background, but it didn't have to be from that. I could have taught myself trading or learned and experimented with $50, $100, and I think that's the beauty of crypto. And that's what I would tell my younger self, is just to go try as many things as possible. Things are obviously changing again now with AI and Claude, and you can code bots. And so I think that's even truer now. So go out there, have fun with small amounts of money, and find your niche.
Yeah, you can just do things, I think, is something that people were saying a lot. And I guess now you can just let the bots do it for you. No, amazing. Sudo, was really, really great having you on. Hope the people enjoyed it. And yeah, wishing you the best for 2026, and looking forward to see what BitMEX cooks.
Thank you. No, please feel free to go check out bitmex.com and take a look at equities and crypto.
Yeah, go crazy on perps, not financial advice. No, thanks a lot, Sudo, and Pythians. I'll see you when I'll see you, maybe with another great guest. And yeah, have a good one.